though Forex will make you very rich. Forex is a business, just like any other business. Now, let me give you an analogy. We have two businessmen. We have Kofi and Kwabena. Kofi and Kwabena are both phone dealers. They have gone to the phone market to buy phones to come and sell. There's a particular phone brand out there. Let's say it's a Samsung phone. Now, the market value of that Samsung phone is 500 cedis. Okay? Kofi goes and then he's able to bargain with them and he buys it. The market value is 500 cedis, but Kofi is able to buy it for 400 cedis, which means he has bought it at a what? Discount. Kwabena also goes and the market value is 500 cedis, but Kwabena is not a very good businessman. So instead of buying it for 500 cedis, he ends up buying it for 600 cedis. He has been cheated because he's buying it at an inflated price. Do you get me? Kofi bought it at a discount price. Kwabena bought it at an inflated price. So which of them is a better businessman? Type your answer. Is Kofi the better businessman or Kwabena? Kofi bought it at a discount. Kwabena bought it at a discount at an inflated price. Which of them is a better businessman? Let me see your answers. Kofi is very obvious. Kofi is a better businessman. Now, the discount guy. Yeah, somebody said discount guy. I like that response. Discount guy. I like that response. So it's the same thing in Forex. Some people buy at inflated prices because they are not very well informed traders. Informed traders never buy at a discount at an inflated price. They always buy at discount. Now, once you establish your daily rate, Fibonacci will help you. Me, I've been using it for quite some time. So even without plotting Fibonacci, I know where the discount is. But it's new to some of you. Some of you may already know it, but I believe it's new to the majority of you. So once you have established your range, that is after you have established that the market is a bullish market. Now we are waiting for price to come to discount for us to buy. Now, how do we know it's in discount? When price falls below 50%, can you see 50% over here? Type yes if you can see 50% equilibrium. 50% is the fair market value. Type yes if you can see 50% equilibrium. Very good. So it's fair market value, but we are not even interested in buying it at a fair market value. We want discount. So we are patiently waiting for the market to come to discount. Now, all the prices below 50% are discount. This is 62%. It's a discount price. We have 70.5, also known as OTE. Now, OTE means optimal trade entry. It is also discount. And 79% is deep discount. Sometimes it comes that deep. Now, I took this trade. Let me see those of you who have been learning. I waited for this trade to come to 79% before I bought it. Now, you may be asking yourselves, why didn't I buy it at the other discount prices? This is the reason. I looked to the left. That was Friday's price action. Then, this is a support level. But this is a bullish engulfing pattern. Can you see the bullish engulfing pattern? Let me highlight it. Let me see those of you who have been revising every day. But I want to make your work less difficult. So let me highlight it. Can you see it? Can you see the bullish engulfing pattern? If you can see it, type yes. Type yes if you can see the bullish engulfing pattern. Very good. So I realized that price was at a support level, and the support level has happened to be last week Friday's low. But I also saw that there was a bullish engulfing pattern there. So I knew price was coming down there to find support. Let me place a horizontal line there. You see? I have placed a horizontal line there. Now, another reason why I knew it would come down there is because there is a gap over here that price had to come down and fill. Now, the $1,000 and above deposit group, I'll show you how to identify these gaps. It has to come back to fill that gap. And then there's also a bullish engulfing pattern there. That's how I knew it will go for 79% discount. And look at what happened. You see, immediately it filled the gap and then went for the bullish engulfing pattern, which is a bullish order block, by the way. It didn't waste time over there. It started going up. Do you see how fast it moved? Now, I held this trade till this box appeared. Then I got out because I looked at the dollar index again. And then I realized that it was likely to be strong because I knew it was going to retrace up. That was when I informed you in the group that the dollar is likely to be strong for a while. So be careful. Those of you who were in the group on that day, you remember. So look at the pips. you would have made if you had caught this trade from here right to this place? 79 pips. You close it. This is intraday trading. So once you book your 79 pips, you are done for the day. If it's the only pair you trade, you have made your 79 pips. Close it. Go to sleep. Go and spend time with your wife if you are married. If you are not married and you have a girlfriend, go and spend time with her. Spend time with your friends. Go and watch a movie or do something. You are done for the day. Close the chat. Go and rest. Then in the night, when the market closes, you open your chart again to see where the daily candle closed. Then you know where the daily candle closed. You write it down in your Forex journal, and then you wait for the following day's New York session. That is if you want to trade GBP USD. Its true intention is always revealed during New York session. So you'd have closed it. You have taken note of the previous day's candle close. Then you wait for New York session. So by New York session, you would have seen the London high. Then you look for your range, and then you repeat. You make your profit, you are out of the. So you not stay in the market for long. You'll be in the market for a few hours. Let's say some 4 or 5 hours. Then you are out. Then you can go and do your other activities. You see, I taught some people this, and they are making very, very good trades with it. And they are excited because they're able to book profit every single day. So if you understand the daily cycle, you can take about 4 or 5 pairs that you'll be trading. Then you analyze those pairs, and you only wait. When I teach you price and time analysis, you will understand when to enter the market with regards to the various pairs. There are some pairs that move during Asia, some that move during London, some that move during New York. And now any pair that has the dollar in it shows you its true intention during the New York session. If you trade it during London, you are likely to lose because you are falling for the fake move. The move we refer to as a Judas swing. That move will betray you. That's why we call it Judas swing. It's a swing that will betray you. When I teach you market structure, you understand what a swing is. We will be doing market structure on Friday. So you see how you could have simply traded this pair. That is exactly what I am talking about. So I haven't traded this pair ever since I closed my profit over here because I know that long term is bullish. So I'm not interested in the sales. That is the type of trader I am. If the trend is bullish, I'm only looking for buy opportunities. But thanks be to God, now we are able to tell when a pair or an instrument is very likely to retrace. That was how I knew the dollar was going to retrace yesterday, and I sounded an alarm in the group because we understand where the liquidity is and where the gaps are. Okay, Fibonacci, you are in love with it already. You have not seen anything yet. You are going to fall more in love when we teach you other things. You are not, your love has just started, Mr. Jared. You are going to fall deep in love with Fibonacci and all the other things we'll be teaching you. When we teach you market structure and then price and time analysis, you will not only fall in love with these concepts, you will fall in love with Hantech in general. Because you have other friends who are trading out there and they don't know these things. This is not public knowledge. What we are teaching you here is very, very sacred knowledge. Some traders know it, but the majority of traders don't. So that is an example. Very good. So what I want to do now is to plot Fibonacci. Okay, we'll look at another example. Then we'll look for the daily range, and then I'll show you Fibonacci. Let's look at USD CHF. First of all, let me clean these horizontal lines so they don't show up in another chart and be disturbing me. Now let's look at USD CHF. This is USD CHF. Now on Sunday's, what do you call it? Sunday's outlook, we spoke of USD CHF and we said the trend was what? Bearish. This is today's price action from here to here. From here to today is today's price action. From here to here was yesterday's price action. Yesterday was Tuesday. Then this was Monday. So, yeah, this was Monday. Yeah, this is Monday. And this was, what do you call it? Friday. Good. So, we want to know, we are coming to trade a daily cycle on USD CHF. So first of all, we have to go to the previous day's price action. And since we are looking for sales, we are interested in what? the highs. When I say highs, I'm referring to resistance. So we are more interested in the highs than the lows because the lows are for buys, but we are looking for sell opportunities. Now, if you come over here, like I said, this pair, USD CHF, most of the time, nothing is perfect. So some of the time it won't happen the way I'm saying it. But most of the time, you see its true intention during the New York session. I can say 8 out of 10 times. You see its true intention during the New York session. So we would have waited for New York session. Now, then once the New York, we would have waited for London session to be over. Then once London session was over, what would we have looked for our resistance? This would have been our reference point. But then if you look at what was happening, price has closed above this previous high, which was Friday's New York high. That means that this high is no longer valid. So you can't use it for analysis because price has broken it. That means price is going for a higher high. So what do? You go to the previous day. If you come to the previous day, that high, this is the previous day. That was last week, Thursday. That high was what? Has been breached because price is higher than it. So this is where we would have come to look for our high, our reference point high. That was, let me go back so you guys don't get lost. This is today's price action. This was yesterday, Tuesday. This was Monday. This was Friday. This was Thursday, last week, Thursday. This was Wednesday, and this was last week, Tuesday. So Tuesday's high has not yet been traded into last week, Tuesday's high. So that would have been our reference point. We are only looking at that because all the highs we could have used, price has traded above them. So we can no longer use them for analysis. Those highs have been violated. So they are no longer valid for analysis. So we would have been looking for one that is not yet violated. So we would have come over here. Now, I may have to zoom out so that I can see what is happening over there. Now look at something. You realize that, okay, so let me take it again. So this is today, Wednesday. This was yesterday, Tuesday. This was Monday. This was last week, Friday. This was last week, Thursday. Last week, Wednesday. And last week, what? Tuesday. So this would have been our reference. So Tuesday, Wednesday, Thursday, Friday, and this is Monday. So let me illustrate here. So this is, so once a high or a low is violated, you look for a new high by going further back on your chart. Once it's violated, you can't use it for your analysis. So this is Monday. So this would have been our reference. Okay. So like I was telling you, we do our analysis from the left to the right. We don't do our analysis from the left to the left. No, we go back to the left because it's the past. And we are interested in what? Future price action. That is why we do our analysis from the left to the right. Now, if you look at the right, where is the lowest point? If you look to this is a low, this is a low, these are all lows. But you realize that this is the lowest point as far as this range is concerned. So that would have been our what? Our reference low. We are looking for our reference low because we want to establish the trading range so we can see where we would have entered for Monday's trading. So we would have taken our Fibonacci. This time is a sell. So we don't plot from the low to the high. Rather, we plot from where? The high to the low. So we would have taken our Fibonacci, which is implied support and resistance, clicked on our reference high, then would have dragged down. We are dragging down till profit scaling. With regards to the parameters, then we would have ended here. Now see something. This was equilibrium. I only zoomed out so you can see what is happening. So you have to strain your eyes, bear with me, in order to see some of these things. This was equilibrium. So this was Monday. There's no way we'll be selling here because it's equilibrium. Equilibrium is fair market value. We don't want to sell at a fair market value. We want to sell at what? Premium. Now let me go back to the Kofi and who did I use? I said Kofi and Kobina. Let's go to the Kofi and Kobina analogy. Kofi bought the phone at 400 cedis, which was discount. Kobina bought his at 600 cedis. Now they are both going to sell. But because Kofi is a smart businessman and he likes to make a lot of profit, instead of selling it, let's say instead of selling it for, let's say, 800 cedis, he decides to sell it for 900 cedis at a premium. Now, Kwabena, who bought it at 600 cedis, has gone to sell it for 700 cedis. Which of the two will make more profit, Kofi or Kwabena? Type your answer. Let me see which of them do you think would have made more profit, Kofi or Kwabena? Kofi, who sold at a premium, or Kwabena? Hey, the answers are not coming. Okay, they started coming. Definitely, Kofi would have made more profit. So in Forex, we are waiting for price to come to premium before we sell. If it doesn't come to premium, there's no way we are selling. We are not interested in fair market value. Fair market value is good, but we don't want fair market value. We want discount, premium. We are selling, so we are interested in premium. Now, any of the figures below 50% is premium. So you see, we have 62%, we have 70.5% OTE, we have 79%. Now on Monday, it even went above that. Then it almost came to 100%, which is deep premium. Now this is why it came to 100%. In fact, to turn you guys into very formidable traders, you have to learn how to identify liquidity. Now, even though I have zoomed out, when I look over here, I can see what we call equal highs over here. So that tells me there's liquidity here that they have to raid before they come down. So though it came to 62% and 72%, I'll not sell it because I know that there's liquidity equal highs over here. Look at where my cursor is, that they have to go and raid. That was during last week Tuesday's New York session. It created equal highs over there. Did I say equal lows initially? I'm referring to equal highs, sorry, not equal lows. There are equal highs over there that they had to go and raid before. So you would have waited, assuming you understand the daily cycle, you understand Fibonacci, and you understand liquidity as well. You would have waited for them to raid the liquidity above there. Then immediately after they raided it, you enter your trade. So you would have caught it at a very good price, a very good premium, deep premium. So assuming you entered after the liquidity was raided, and you would have exited in this box. It's always good you exit in that box.